Thank you for standing by, and welcome to the Orocobre 2019 half-year financial results market update. All participants are in a listen-only mode. There will be a presentation followed by a question and answer session. If you wish to ask a question, you will need to press the star key followed by the number 1 on your telephone keypad. If you wish to ask a question via the webcast, please click on the Ask a Question tab on the top right corner of your screen anytime during the conference. I would now like to hand the conference over to Mr. Martín Pérez de Solay, Managing Director and CEO. Please go ahead.
Thank you, Lexi, and thank you everybody for joining the 2019 half-year financial results for Orocobre. I'm Martín Pérez de Solay, and I want to take advantage of this opportunity that I have to first meet you after being named the Orocobre MD and CEO on last January 18th. I know that Orocobre enjoys a large and very supportive investor base, and I would like to take this opportunity to understand all your concerns and interest with regards to Orocobre. I am pleased to be appointed to lead Orocobre through the next stage of development of becoming a larger and more solid company. I also want to thank the board of the company and the team for giving me a very warm welcome and making me feel at home. In order to continue, we should move on to the presentation now, and there's a very nice disclaimer which I recommend you read carefully at some point in time. Again, this was another strong half-year result supported by a nice cash margin of $8,000 per ton, which enabled us to reach a level of sales of $63.5 million at an average price of $12,295 per ton, reaching an EBITDA for the period of $36.6 million. All these figures, as you can see, are better than the previous year, except for the EBITDA, which recognizes the impact of a $3 million tax export temporarily announced by the government on September 2019. During the same period, we've been able to commit $20 million to the expansion project that we will address shortly. With regards to the current quarter, we, as announced in the month of December, we continue to see the same trend in market prices with an average price that we expect around $9,000 per ton for the first quarter of the year. And as we announced last Monday on the back of strong rains in the area for the first few months for the first few weeks of February, we expect the production of the fiscal year of 2019 to be very similar to what it was in 2019. With regards to the Orocobre Group, the net profit for the period was $24 million, including income tax recoveries, which Neil will explain shortly. And it's also important to highlight $180 million debt package has been secured for the expansion project at Olaroz. We are now finalizing the documentation and agreements with the banks on that regard. The cash position of the company continues to be very strong with $284 million of cash in our balance sheet, which yields a $207 million net cash position. The other important highlight before passing it on to Neil is to remark that Borax has returned to the profit area, recording a $600,000 profit for the 6-month period elapsing these results. Neil, I'll now pass it on to you so that you can explain the financial numbers in more detail.
Thank you, Martin, and a good morning to all. First up is the Olaroz joint venture structure. Toyota Tsusho Corporation last year bought a 15% stake in Orocobre. Coupled with its 25% investment in Olaroz, TTC now has an effective 35% of the project. Orocobre has a 72.68% ownership in SDJ Pte, which in turn has a 91.5% interest in SDJ SA, giving Orocobre an effective 66.5% interest in SDJ SA. The statutory accounts show such investment as being equity accounted due to joint control being exercised with Toyota Tsusho. We have therefore presented the joint venture on a 100% basis and then eliminate the non-controlling interest to show what Orocobre's accounts would look like on a proportionally consolidated basis. From 1 January 2019 onwards, we will no longer equity account SDJ Pte into our accounts, but consolidate it. Moving on to the next slide. This slide details the profit and loss on a proportionally consolidated basis. Moving from left to right, the first column is the statutory profit and loss as shown in the accounts. The second column shows the joint venture on a 100% basis, whilst the third column eliminates the non-controlling interest. Column 4 eliminates the equity accounted amount, resulting in column 5, which is what Orocobre's profit and loss looks like on a proportionally consolidated basis. Looking at column 1, the EBITDAX loss of $3.3 million, which takes into account corporate costs of $3.8 million, shows Borax has moved to an EBITDAX profit of approximately $600,000, which is a $1.6 million improvement over the same period last year. Taking into account interest earned by Orocobre Corporate Office, which is made up of interest on term deposits and shareholders' loans, the result was a profit before tax, impairment, and forex of $3.6 million. Looking at column 2, on a 100% basis, another strong half year for the joint venture, with revenues of $63.5 million, earnings before interest, tax, impairment, and forex, and earnings before tax, impairment, and forex of $32.2 million and $21.3 million, respectively. Forex losses of $6.9 million were mainly due to the severe peso devaluation on the peso VAT receivable, as well as advance payments to suppliers. An income tax benefit of US $21.2 million was booked, which relates to the future temporary differences being unwound, hence reducing the deferred tax liability, given a further reduction of the Argentine income tax rate from 30% to 25% in 2020 and beyond, resulting in a tax benefit of US $14.3 million. Additionally, the reversal of the deferred tax liability, which had been recognized and charged in financial year 2018 for withholding tax on future profit distributions of $13.1 million, was recorded as an income tax benefit. These amounts were offset by income tax and foreign exchange differences for the period of US $6.2 million. Following the forex charge and income tax benefit, the joint venture reported a total profit of $35.6 million. On a proportionally consolidated basis, Orocobre had revenues of $51.5 million, EBITDAX of $21 million, and a profit before tax of $8.8 million. Total profit after tax was $24 million, following its share of the tax benefit previously explained. Moving on to the next slide, this waterfall chart breaks down the proportionally consolidated profit and loss from Orocobre's perspective, which is the final column in the previous slide. EBITDAX was a healthy $21 million. The foreign exchange loss is as explained on the previous slide. Orocobre has approximately 33.5% shareholding in Advantage Lithium and booked an $800,000 charge, being its share of AAL's loss. The income tax benefit booked is Orocobre's share of such benefit from Olaroz, as explained in the prior slide. This then brings it back to the statutory profit of $24 million. Moving on to the next slide, this slide shows the proportionally consolidated balance sheet of Orocobre, which is detailed in the same format as the profit and loss. The balance sheet is stronger. Under current assets, cash has decreased on a consolidated basis to approximately $304 million, principally due to the funding of the Olaroz expansion, corporate costs, and the Cauchari joint venture funding. Inventory under current assets and non-current assets has increased largely due to an increase in finished product inventory at year-end, as well as an increase in brine inventory. VAT has increased due to expansion capex, partially offset by the Argentine peso devaluation. Under non-current assets, the increase in exploration assets is mainly due to Orocobre's share of the spend at Cauchari, given its direct shareholding in the project. The investment in the associate of $22.6 million is Orocobre's investment in Advantage Lithium. During the year, Orocobre participated in a private placement of $5 million, which was partially offset by Orocobre's share of AAL's head office costs. Current and non-current liabilities, loans and borrowings on a consolidated basis have remained a similar number compared to financial year 2018, due to an increase in funding for the expansion, partially offset by the project loan debt repayment. The deferred tax liability has reduced due to the effect of the earlier explanation. Moving to the next slide, the proportionally consolidated cash flow shows strong cash flows from Olaroz. On a SDJ PTE basis in column 2 and on a proportionally consolidated basis in column 5, a build-up in inventory and other items of $14.4 million as detailed on the next slide, coupled with a payment of $2.9 million for the newly introduced export duty, increased cash outflows. The expansion of Olaroz and sustaining capex resulted in a capex charge of $20 million. The joint venture partners funded the expansion to the extent of $28 million. The consolidated cash for the period was $304 million, leaving the company well positioned to fund its expansion plans. The movements related to Olaroz are detailed in the following slide. Moving to the next slide, Olaroz is repaying debt as a result of a strong EBITDAX of $36.5 million. Shareholders' loans of $28 million were made to SDJ to finance the expansion. During the period, SDJ increased its working capital pre-export finance facility by $3.5 million. SDJ repaid Mizuho Bank principal of $11.5 million related to the project debt. Capex of $20 million relates to $13.8 million of expansion capital and $6.2 million of sustaining capex. Finance costs are related to the Mizuho interest rate swap, and working capital facilities. A working capital movement of $14.4 million occurred. The main reasons for this are an increase of finished goods inventory of $4.2 million and $3.7 million of lithium carbonate equivalent in brine. The other working capital movements are a net increase of $6.5 million in accounts receivable and advance payments to suppliers, net of accounts payable. VAT payments exceeded VAT receipts by $7.5 million, mainly related to expansion capex VAT and a slower recovery of VAT. Moving to the next slide, strong cash flows have helped to reduce the Olaroz project debt facility down from $192 million to approximately $110 million, which translates to $82 million of principal paid over the first 3.5 years of the loan. The March payment, which is due in 2 weeks' time, is taken into account in the numbers I've just mentioned. This facility has a low interest of approximately 4.25% and is repaid biannually through September 2024. Orocobre has net debt of $207.7 million as at 31 December. So in summary, we have established ourselves as one of the world's highest margin producers. We have strong cash flows and are paying down debt, and we have a strong balance sheet with $284 million of corporate cash to fund our expansion plans. Thank you, and I will pass you back to Martin.
Thank you, Neil. And moving on to the operational review, as said before, in order to take Orocobre through its next step of development, which is becoming a larger and more solid company, we need to set a vision. The vision is to be a world-class supplier of lithium chemicals. The way we understand a world-class supplier is by maintaining the existing cost leadership and improving it, having built-in quality within our systems and processes, and continuous process and product innovation. As you know, Orocobre supplies into a very dynamic industry that changes its requirements every year, and we need to be up to the speed of the requirements in the changes from our customers. In order to improve our performance, we need to better understand and serve our customers, and that is the key of our vision. Orocobre has all the key attributes to achieve this. It's the quality and the quantity of the brine resources the Olaroz Salar support us in this strategy. As explained by Neil and said before, the strength of our cash margin makes us a world-class cost leader, and we have to continue to improve on this. We have very strong teams on site with very good technical people. There's expansion potential within the existing properties and within the whole salar. We have the right joint venture partners. The partnership with TTC not only enables us a wider access to the world markets, but also a direct access into TMC, one of the largest demanders of lithium for electric vehicles in the next few years. And we also have secured access to capital with the key financial agreements for the expansion projects already in place. Moving on to the next slide, please. Based on what we said before, we have initiated a review at the operational areas with 3 focuses. Focuses are safety, quality, and productivity. We believe that this is a virtuous circle that will produce successful results for Orocobre. We will continue to focus on the existing strategic initiatives, the improvement of production, not only in terms of quantity, but also in terms of quality from the existing facilities at stage 1. The expansion that we're undertaking in stage 2 at the Olaroz salar, the Naraha lithium hydroxide plant, which will add us the possibility to tackle the rapidly growing lithium hydroxide market, and a better basin understanding by drilling the basin more deeply and having a thorough understanding of total resources in the area that will enable us to foresee the future. The aim is to improve the management bandwidth and be able to focus and deliver better on the existing projects, and this should give us the opportunity to develop better organizational capabilities. We believe the results of all these measures should give us a better customer satisfaction and improve shareholder value. Moving on to the growth projects, the number 1 project we have ahead is on page 17, is the stage 2 development of the Olaroz facility. As explained several times before, the objective is to focus the existing facilities of stage 1 into the production of purified battery-grade lithium carbonate, while stage 2 will primarily focus on production of primary product, with an offtake of roughly 50% of the production to go into the Naraha lithium hydroxide plant that we are currently working on. As said before, during this 6-month period, we committed $19 million of the total estimated $295 million for the expansion project, and we are now working on finalizing the detailed engineering and setting the purchase orders for the long-term delivery items for the expansion project. As a consequence, we are reviewing budget and timing of the project, also to incorporate the ramp-up and commissioning periods that will usually take longer than expected in this industry. Moving on to the next slide, when we talk about the pond capacity, the most important thing here is that we are growing from a current pond area of 4 square kilometers into a total of more than 13 square kilometers. And as a consequence of having started to build the ponds for the second stage well in advance, we have been able to start the harvesting of the ponds from the first stage, maintaining the brine supply to the plant. As explained in the chart, further 6 ponds are currently under construction, and ponds are the most important part of the process because they provide the brine required in terms of quantity and quality by the process. Moving on to the next slide, as I said before, half of the production from the growth in the capacity at Olaroz will be the feedstock for the Naraha lithium hydroxide plant. We're working on this jointly with TTC. The slide hasn't changed very much from what you've seen before, but we are continuing to make progress, and we have evolved significantly in the project in the last month, and we expect to be able to make a final announcement of FID and start of works within the next month. Moving on to the third important project and strategic is the understanding of the basin. The Advantage project has worked very well. Advantage has completed the drilling of a large quantity of wells that have given us very good information, not only on Advantage resources, but on Orocobre resources. As you can see, Advantage has proved very good brine quality and quantity of brine to be drained from the wells to the north of the property, which is the southern boundary of our property. And this not also proving the quality of the resources that we have in Olaroz, but also the continuation of the salar towards the south and the ability of the Cauchari salar to become a very interesting production opportunity in the area. Moving on to Borax, Argentina. As said before, it's a very good period for Borax. It's returned to positive operational profit of $600,000, mostly fueled by the reduction of unit costs and an increased number of sales, reaching $9.3 million in the year, and in the half year, I'm sorry. And the most important part is that we are refocusing Borax on the southern corn markets. Brazil, Argentina, Chile, and Uruguay continue to be large demanders of boric acid for the agricultural industry. The Brazilian ceramics industry, which is the fourth largest in the world, is a very interesting customer for Borax that we've been developed lately. And we're now looking into new applications of boron products for shale drilling in the Argentinian Neuquén Basin. I will now pass it on to Tara, who will explain us the market views and expected developments.
Thank you, Martin. While the lithium market continued to exhibit robust growth rates averaging 20% year on year, China's economic conditions added to softer market conditions. Uncertainty among China's battery chain regarding the imminent EV policy amendment and increased supply from Chinese producers moved the Chinese domestic price for both carbonate and hydroxide below the seaborne prices. As a result, a price arbitrage opened mid-2018, encouraging Chinese producers eager to shift inventory to the seaborne market. Now moving on to the next slide. During the recent December quarter, China became a net exporter of lithium carbonate for the first time in over 8 years. Lithium hydroxide producers in China were also impacted for 2 reasons. Firstly, the expected size and speed of China's shift to new generation nickel-based cathodes, specifically NCM 811, favoring hydroxide, did not eventuate as expected. And secondly, the majority of new conversion capacity added during 2018 was hydroxide-based. As a result, exports grew 75% quarter on quarter as hydroxide producers targeted seaborne markets, manufacturing battery materials with a higher dependence on hydroxide. Now moving on to the next slide. Chinese exporters targeted Asian markets, notably South Korea and Japan, capitalizing on proximity of these markets relative to China, consistent robust demand growth, and lower exposure to China's downstream electric vehicle market. Furthermore, lower than anticipated production from key Chilean suppliers during 2018 provided a favorably timed opportunity to Chinese exporters. During 2018, Chinese producers grew market share of South Korea's carbonate and hydroxide imports by 21% and 15% respectively. Now moving on to the next slide. The structure of the battery market in terms of current capacity provides rationale as to why the market retrieved to South Korea and Japan, while the Chinese market remained soft, with this geographic region currently accounting for almost a quarter of total global battery capacity. Shifting attention to 2023 and 2028, You can see that North America and European capacity is expected to grow share, while China largely retains its current proportion of the market, underpinned by easing of the Chinese government's policy on foreign investment and international car manufacturers' confidence in China's long-term prospects. Now moving on to the final slide. Orocobre views the current conditions as a necessary correction following 3 to 4 years of high growth, with market prices reaching levels 2 to 3 times or more greater than the historic average. The market is not short of recent examples demonstrating the challenges involved in adding lithium supply. Furthermore, over 1,500 gigawatts of announced battery manufacturing capacity is expected by 2028, supporting robust demand growth. Accordingly, Orocobre maintains long-term demand forecasts in line with the consensus of other established lithium salt producers in the range of 17% to 20% CAGR between 2018 and 2025. And that concludes the market section. I will now pass the presentation over to Martin. Thank you.
Well, thank you, Tara, and thank you for your market knowledge and keeping us well up to speed with the market trends as usual. On the summary of these results, the most important things are the profit for the period of $24 million, with Olaroz facility continuing to earn positive EBITDA of $36.6 million, boosted by the existing $8,000 margin per ton that we recorded in the period. The growth projects are well underway and funded. The expansion at Olaroz and the 10,000 tons lithium hydroxide plant in Naraha, as explained before. With regards to the existing quarter, to the current quarter, we after the rains, we expect a similar performance to previous year in terms of total production. And as explained in December, we continue to see prices in the range of $9,000 per ton FOB, give or take a few $100s on some agreements that we yet have to finalize. The other important thing is to highlight the return of Borax to operational profit. And now I want to thank the whole team of Orocobre for the effort in putting together this presentation and explanations, and I will pass it on to Lexi again for the Q&A sessions.
Thank you. If you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. If you wish to cancel your request, please press star 2. If you are on a speakerphone, please pick up the handset to ask your question. If you wish to ask a question via the webcast, please click on the Ask a Question tab in the top right corner of your screen. Your first phone question comes from Reg Spencer from Canaccord Genuity. Please go ahead.
Good morning, everyone, and good morning, Martin. My question relates more around operations. Obviously, you've been impacted by wet weather in the Puna. I was wondering if you could provide some comments around the status on the decision to install evaporators or other mitigating strategies to deal with potential weather impacts going forward.
Well, thank you for your question, Reg. The evaporator crystallizer thing has been on for quite some time. We are looking into this alternative. Yes, we've been impacted by rain, and it's expected to be impacted by rain during this period of the year, every year. We've taken some measures and we're improving preparation for the next rainy season. In the meantime, what we are doing is trying to keep the brine quality as high as possible. We are endeavored to analyze and study evaporator crystallizers options, and we will give a thorough analysis to that. Have not yet seen anything compelling in that regard, other to mention that they are significantly complex and expensive from an operational cost point of view, as they demand lots of energy and acidification of the brine. but they also provide the solution of being able to keep the brine during the wet season.
Okay, thank you. And I guess leading on from that point then, can you provide a comment on how long you expect it to take to get your brine concentration or your pond concentration levels up to more steady state levels, noting that evaporation rates do start to tail off as we move into the winter?
Well, yes, we expect to keep a lower concentration in the brine until the end of the month of March, since there may be some more rains hitting us, and that's the reason for having announced our expected production for the year similar to what it was in the previous year, taking into consideration that possibility. As a consequence, we are running no purified product in this month, and that also hence impacts the price forecast. We're mostly moving towards primary product, since the recovery rates come down as a consequence of a lower concentration and the costs go up. The best operation is to produce brine to produce primary lithium carbonate during this month.
Okay, thank you. And just one final question around that pricing. So your pricing guidance for the quarter, $9,000 a tonne, that's obviously a lot lower than the deck Q. Previously, you guys commented that pricing environment was a function of both your product mix and market conditions. So that Q-on-Q drop towards 9,000 is now looks like it's a bit more biased towards product mix. Is that an accurate way to think about it?
It continues to be a mix of both. As I said before, we still see the market slightly soft, as said in the December release. So it's a mix of both. I can't tell you it's just one of them.
Okay, thank you. I'll pass it on. Thanks very much.
Thank you. Your next question comes from Joel Jackson from BMO Capital Markets. Please go ahead.
Hi, this is Bria Murphy on for Joel Jackson. Thanks for taking my question. I'm just wondering what your outlook is for your lithium cost per tonne, given your lower production volume forecasts in 2019. Thanks.
It's Neil. We generally don't put out cost per tonne looking forward. We've never guided on that, and we'll continue not to do so.
Okay, and then just on the hydroxide plant, I noticed that the EPC contract is still outstanding. Is this something that could impact, I guess, the commissioning schedule for the plant, and when do you expect to, I guess, finalize negotiations there?
Well, we've made a lot of progress in the last few weeks with the TTC and the preferred contractor on the plant. We expect to announce something within the next month and keep the original schedules for the Naraha plant.
Thank you. Your next question comes from Tim Hoff from Deutsche Bank. Please go ahead.
Hi guys, and welcome Martin. I was wondering if you could talk through the evolution of your customer mix. Have you been engaging with new customers, and is there any initial discounting to get your products through the door to start off with?
Let me please pass that question on to David, that has been following the market longer than I have.
Yeah, Tim, what we have in train already and was happening last year and is currently happening and is planned to continue to occur throughout this year, and I would expect beyond that, is we have quite a number of product trials with customers, particularly in the battery space, for micronized product. So they'll continue throughout this year. What that means in terms of pricing is that when you're looking at these large corporate accounts in that battery space, they have existing contractual arrangements for supply at very competitive prices. So obviously we need to meet the market on that, and of course also acknowledging that there's a cost to customers to run these product trials, and they typically run over a period of 3 to 6 months. With the bigger guys, they tend to be 6 months, and obviously the volumes are higher.
Okay, so all else being equal, that should reduce a little bit in the future as those customers, if you can snag those accounts?
Well, yeah, it'll mean that we'll be able to evolve to a higher proportion of longer-term agreements, because ultimately that's what's driving the activity for approval in the first place from both sides, from our side and from the customer side.
Tim, if I can add to what David said, from an operational point of view, improving quality and reliability becomes key to secure these long-term contracts, and we're working seriously in that direction, which is where we see long-term value to shareholders being derived from, is from establishing these longer-term relationships, and that will enable us to achieve better prices.
And I guess, Martin, we'll probably jump straight onto that. The pond system's come under a lot of scrutiny in the past. I guess, how do you view the stage 1 ponds, and are you satisfied with the current system? Early take, I know, but...
Well, it has been a lot of learning on the stage 1 pond system, and a lot of it has been incorporated into the design of the second stage pond systems. As I said before, the way I see quality is built-in quality since the very first stage of the process, which is the design of the process. Also, we are adjusting some minor issues in the design of the second stage lithium carbonate plant to address the evolution in customer quality needs that we are seeing. This industry is becoming more and more sophisticated, and the customers are requiring lower amounts of contaminants all the time, and we're improving our products and improving designs to be able to do that. Addressing your first part of the question, whether the ponds from stage 1 are enough or not, it all depends on the climate and the type of production we're doing. For a prime production, ponds from stage 1 are well enough. As we move into purified product and recovery rates are lower, we put those ponds under more stress. So the ability to have more pond area available should help us improve results in the future.
And very quickly, Neil, if I could just ask one quick question, which is to switch over to a consolidated accounting, would it be fair to use the current consolidated balance sheet in the presentation as a rough base for what we can reference from?
Correct. Yeah, exactly. The final column there, Tim, would be what the consolidation will pretty much look like.
Fantastic. Thank you very much, guys.
Thank you. Your next question comes from Rahul Anand from Morgan Stanley. Please go ahead.
Hello, Martin and team. Thanks for the opportunity. First one's around the plant itself. Just wanted to understand, post the installation of the CO2 recapture facility, at this point in time, does the plant have the capability, if the brine's available, to be able to sort of produce 100% purified product, and that too at the reduced cost, i.e. there's no external requirement of CO2 anymore, or there is still? And how does that cost curve change with that? That's the first one. Thanks.
Well, many parts to your question. I'll try to answer them all. The CO2 recovery system enables us to recover part of the CO2 that we produce. Thus, it requires a lower amount of CO2 to produce purified product. Nonetheless, we continue to require external supply of CO2, but what we are seeing is the cost of the CO2 reagent coming down as a consequence of that. We're currently recovering roughly 55% of the CO2 volume that is being used. That is enabling us to do larger runs of purified product without having to add additional CO2 to the system. Second question is, yes, we can run the existing plant at 100% purified product. There's no limitation to that in terms of the plant can run fully on primary or fully on purified. That's not a limit. I forgot the third part of your question. I'm sorry.
No, that's fine. I think I've probably forgotten it myself. But in terms of the CO2 specifically, I mean, if we go back in time to the feasibility, the idea was to be able to recapture 100%. Is there any way that that's possible? Or, I mean, is there any way that you can bring the cost down going forward in terms of the CO2 specifically, perhaps atmospheric recapture or something else? I mean, because you are trying to sort of utilize this plant at 100% CO2 terms at least.
Yeah. There's a challenge. We operate at 60% normal atmospheric pressure up there, so it puts some challenge on that. Nonetheless, I haven't been here for only 3 months and 1 month of CEO, but I understand that the objective was never to capture 100% of the CO2 that is being used in the process, because the design would never allow that. So we are within the expected range.
Understand. Okay. And then in terms of the pond system then, just wanted to understand, is there any impediment perhaps, and this is a very basic question, in basically taking some of the harvest pond inventory which is at concentration and store it sort of undercover or elsewhere in a tank? I mean, I know some of the brine producers around the world do tend to truck volumes of brine to industrial facilities and then process them there. I mean, is that something that potentially can be implemented here?
Well, let me tell you what we've done, and we are seeing some result of that. And indeed, the quality of the brine is better than what it was in previous years with the same amount of rain. What we've done is to increase the depth of the ponds that have the brine ready to enter the plant. That is kind of having a tank, but the volumes are huge. You wouldn't be able to keep all that brine in a tank. And given the concentration of magnesium that the brine that we have in the process, it is hardly difficult to increase the concentration of the brine beyond the current levels we are increasing at the ponds without losing any lithium in precipitation format in those ponds. So what we are looking into is, something like maybe deeper ponds in the future that should help us have a larger amount of brine stored with a lower surface, thus less exposed to dilution from rain.
Understood. Okay, and just final one is it's just a follow on from Reg's question. In terms of the product for the March quarter, is it fair to assume that it's 100% primary that's going out the door at that $9,000 price?
It's going out of the door of the plant, but we are selling some purified that we had in stock. So that's why I think I couldn't tell you it is just primary what we are selling in the quarter.
Okay, understood. All right, I'll pass it on. Thanks.
Thank you. Your next question comes from Andrew Hodge from Macquarie Group. Please go ahead.
Thanks, guys. I have 3 questions. The first one is just on CapEx. I had actually missed in the quarterly that you guys had increased the cost for the expansion to $295. And I just wanted to understand, and I realize it's small, but I wanted to understand what increased the cost compared to where you guys were before, and whether or not you're happy with that cost level now.
Well, I think that the 295 number has been out there for quite some time by now, and what we are doing is reviewing that cost as we are finalizing the detail engineering and making, as I said before, some adjustments to the plant and the ponds as we incorporated the learning from the first stage. Don't expect significant move here, but the whole budget is being reviewed, and I would like to take decent time to put forward a revised number and timeline on the expansion. However, the expansion is moving ahead. The works have been done, ponds have been built, and we are not delaying it. Just reviewing the total cost so as to put a number that we can deliver on.
The 295 is new from January. You were 285 before that, but minor point. But just in terms of the debt funding for the expansion then, can you give an idea about how that's progressing at the moment?
I'm sorry. I will have to ask that question again. Neil was pointing out here that the 295 number was announced in the FID release.
Yeah.
That went out on November the 28th. I'm sorry.
Okay.
If you repeat the question, sorry.
Sure. The debt funding for the rest of the expansion.
But that's something as Neil can answer that better than I.
Sorry, so what's the question, Andrew?
What is the difference progressing at the moment, and what's the next stage?
No worries. That's all progressing, Andrew. It's $180 million, which has been agreed. We're just busy now finalizing documentation over the coming weeks, and we'll lock it down. So, I mean, it's all been agreed. It's just a matter of, updating all the financial documentation.
Okay. And then last question is really just in terms of the production losses that you guys have had from the rainfall. I noticed Livent kind of obviously downgraded as well. Just wanted to get a sense of, I guess, the order of magnitude. I think they said that they'd lost about 2 weeks worth of production. And so I just wanted to get if that's a kind of a similar number to you guys.
Well, it's not. We haven't lost any days of production as a consequence of the rain. What's going on is that since the brine quality has been reducing, where we have decided to limit the amount of brine going through the plant to avoid further increasing costs and forcing the plant to run at a level that doesn't make sense to keep a production number, which will then deteriorate the brine quality to a worse stage in the next quarters. So here is a new KPI that we are putting on, which is working towards a stable brine quality at the entrance of the plant. A stable brine quality should stabilize the plant. Once we stabilize the plant, we should be able to understand and improve the recovery grades. And it is this whole idea that I pointed out in the presentation of safety, quality, and productivity. Stabilizing a chemical plant becomes key in terms of improving its productivity, and that's what we are aiming to do.
Okay. And do you think that after this, you guys will be able to provide more definitive guidance then in terms of production?
Well, we'll have to review the guidance policy with our board, and else we are not planning to change it for the time being. But within some period of time, I will be able to better tell the market what I see from the existing facilities, improvements that we need, and expected long-term productions from the plant. I'm taking this time to review and change the focus towards this productivity, quality, and safety standard that we're trying to implement here.
Okay, awesome. Thanks very much, guys.
Thank you. Your next question comes from Warren Edney from Bellevue. Please go ahead.
Hi, thanks. I've just got a couple of finance sort of questions. The export charge in the accounts, where does that sit? Is it in the tax line?
No, it's not in the tax line, Warren. It's before it's taken off in arriving at the EBITDAX. So it's taken off earlier. It's an export duty, really. It's semantics on the name.
And the next one was just on the interest charge. Is that 2 accruals or something like that? It seemed to be a lot higher based on your debt balance and also the interest rate disclosed.
Sorry, the interest accrual, if you can just point me to where you're looking.
The $10.8 million in the accounts.
The finance cost, yeah. I mean,
yeah.
Yeah, it's relating to discounting that we have to perform due to the audit. Obviously, you've got in there as well all the Mizuho costs.
So there's additional charges. It's not just interest charges.
Yeah, it's the ARS receivables that are being discounted in there as well. There's a big charge, and we book it to finance costs, Warren, due to the devaluation. So we've had to discount those ARS receivables, and that just pushes up that number. The Mizuho interest, which would be in there, would always be in there. There's also the interest on the working capital facilities.
All right, and final one. Just on the Borax DNA, I know it's not much, but there wasn't any. Is that a sort of permanent thing, or is it something netting off in terms of the accounting for Borax?
Sorry, which number you're referring to?
In the accounts, there's no DNA for Borax.
Yeah, DNA, yeah, because we impaired all the asset. We impaired the fixed assets at the last period, so there was no charge.
Oh, okay, because I saw that there were still some assets in the accounts Because the segment
Yeah,
out there was 16.
it's work in progress. That's work in process, work in progress
Right.
on
So it's
assets.
not plant and equipment or anything like that.
Yeah, it hasn't come into the fixed asset charge yet. So given we wrote off everything in the prior period, there was nothing to depreciate, and what you're seeing in the accounts is work in progress, really.
Okay, thank you very much. Thanks, Neil.
No worries.
Thank you. Once again, if you wish to ask a question, please press star 1 on your telephone and wait for your name to be announced. If you wish to ask a question via the webcast, please click on the Ask a Question tab on the top right corner of your screen. Your next phone question comes from Glyn Lawcock from UBS. Please go ahead.
Good morning. You talked a little bit about you've sold some finished goods inventory in the quarter. Just wondering, was that priced last quarter, or is it, and so it's pulling through legacy price, or is it having to be priced at the current market? Just give me a sense of how much skew there is on the 9,000 you're realising in the March quarter. And then just sort of more interested in some extra thoughts around the market, how you would characterise it, at the moment, further downside risk or stabilising. And then just, I think on the review, just your early thoughts. Obviously it sounds like you're reviewing CapEx and, all these reviews usually end up costing us more. But is there any offset at all on the volume side as part of this review as well? Do you get a sense that, this review may end up raising capital, but we could also see some other benefits as well? Thanks.
Well, let me start with the last part of your question, and Nick will answer you on the stock issue. Starting from the back, I'm reviewing the CapEx amount in order to make sure that the next number we disclose is a number that we deliver. What I'm seeing is that we are changing certain equipments, and as we place the long-term purchase orders for part of the equipment, we might see changes in the CapEx. Yes, it is usual to see an increase in the CapEx. However, I don't expect to see an increase in the CapEx, nor I want to announce any reduction. I'm just reviewing it, and I will ask you to bear with us for some time until we can publish the new number. We're still using the 295 as our benchmark number for the expansion, and I don't expect surprises here. Having said that, we'll do the same with the timetable. However, you mentioned whether we should expect any improvement as a consequence of that. I will tell you the improvement will come in the process and the quality of products. We're making a more solid and robust process that should be able to deliver better quality and more stable production as we progress. The second part of your question was regarding the market, and maybe David can help me on that. But yes, we'd all like the market to bounce from here, but we continue to see similar situation. I think more of a, I don't know what you would say, David, but a flat market, or what I would
characterise the market. Glenn, it's a bit of a wait and see scenario. I don't want that to sound like a cop out, but it is at this stage. To put a bit more colour on that, there's as you know, there's been a fair bit of additional production that's entered the market with particularly the brine producers in China. As Tara presented, there's been quite a volume of that product that has found its way into seaborne markets. So it's the first time that we've seen product exported out of China in quite some time. So that volume needs to wash through. But look, in terms of when we'll see some stability and a track back to normal market conditions, depending on how we classify normal or define normal, then certainly entering into the second half, we would expect things to have largely sorted themselves out. We don't want to be calling the current position as the bottom, but it certainly has many signs of being exactly that.
The last part is the answer on the stocks, Neil.
Now, Glenn, just your last question. You're referring to the stock. If you can just repeat that exactly what it was.
Yeah, sure. Sorry, Neil. Just when you've obviously commented earlier in the call that you were selling some inventory as well this quarter. I was just wondering, was that priced last year, or is it going out at prevailing market price? Just to give me a sense of, if it was priced last year, that's obviously pulling up the skew of the 9,000. So I'm just trying to understand when it was priced.
Okay, in terms of when the contracts were agreed?
Yeah, so obviously if it was priced last year, it would have been a better price than if you were pricing it today. And so that would then mean what you're selling on spot today. I'm just trying to figure out what the weighted skew of the 9,000 is. How much more? Yeah. Where is the market today? I guess.
Yeah. Look, some deals that were agreed going back to say end of October, November of last quarter. But if you're looking for anything sort of prior to that, the proportion would be very low to zero. Because typically, entering into a new calendar year, we're resetting agreements. In saying that, we actually do have a couple of longer-term agreements in place that are multi-year, but again, they weren't agreed until October, November last year either.
Yeah, but if you excluded the legacy sales, then the weighted average for Q1 of 9,000 would probably be a little bit lower, is the bottom line.
Yeah, I'm not quite sure that would be the case, actually.
Okay, no worries. That's great. Thanks very much.
Thank you. Your next question is a follow-up question from Nick Herbert from Credit Suisse. Please go ahead.
Oh, g'day, guys. Just a few small ones from me, please. Firstly, just taking back to production, appreciate it might be difficult to be definitive on this, but just interested in how you think the recent heavy rainfall may impact next year's production, say FY20, given the cycle times through the pond network. And I guess in that context, just to what extent that might be offset by the pond network expansion that you've spoken to. That's question one. Thanks.
Well, very difficult, as you said, to give you precise numbers on this, as you can imagine. The fact that we are now focusing on trying to keep a good brine quality at the ponds and not over-extracting them to increase production at low recovery rates will help us to have a better, more stable brine quality during the period. We should enter the dry season with better brine quality and be able to improve production as well as improving purified production from there on. Also, the fact that we are building ponds in advance of the second stage has enabled us to speed up the harvesting, and we will see more harvesting of ponds from the first stage as the dry season starts. And thus, the stage one production will benefit as a consequence of the ponds being built ahead of stage two production. Looking into the longer term, managing 13 square kilometers area of ponds will make both stage one and stage two more reliable and foreseeable in the future. It's very difficult to give you more detailed information, and I don't know if what I said answered your question.
Yeah, no, that helps. Thank you. And then just a clarification point, when you were talking about the evaporators, and I know it's still subject to your studies, but is there any chance that those could be installed and brought forward ahead of formal stage two commissioning, or if and as when they come in, that won't be sort of second half calendar 20 at the earliest?
Well, I would have to ask you to wait on that a little bit until I can get a more thorough study about the different technologies available for this purpose and come to a conclusion. I don't have sufficient information to tell you by when could they be installed. I'm sorry.
That's okay. All right, no worries. And then final one just for you, Neil. Just back to the tax, just second half SDJ tax. Is there anything else that may trip us up there, or should we just assume that normalised tax rate that you mentioned?
Yeah, I mean, moving forward now, we've, I mean, you heard what I said and what's in the documents with those two big tax events, but they've been dealt with now, and pushing forward, yeah, we'll just be business as usual in terms of taxes.
Okay, thanks, guys.
Thank you. Your next question comes from Adam Baker from Global Mining Research. Please go ahead.
Hey, morning, guys. Just wondering, with stage 2 capacity, you got your lithium carbonate production for total 42,500 tonnes per annum. Just wondering how confident you are in achieving this, and what do you see as the key issues in achieving this nameplate production in consideration to what you've learnt in stage 1?
The target continues to be the 42,500. We are reviewing the ability of stage 1 and stage 2 delivery. In that regard, the fact that we are making stage 2 more reliable and stronger obviously helps us in that regard. With regard to production from stage 1, as you can imagine, this is a plant that started 2 years ago with a very large ramp-up period and encountered quite a lot of issues that were very well sorted out and by the team to be able to bring plant onto production. There are lots of issues and bottlenecks that affect the overall capacity of the plant to deliver nameplate, starting from brine quality and about sizes of reactors and capacity of pumps and micronizers and else. But the most important factor is working on the recovery factor of the plant. That is, it's a multiplier on the ability to produce. Haven't been able to complete further studies there, and we're working in the direction of maximizing production at the most cost convenient curve for the company, and that's the whole aim of what I name productivity, is to improve the production and reduce the cost of operations.
Sure, thanks, Martin.
Thank you. We do have one question on the webcast. When will the purified circuit resume production?
As soon as brine quality starts to show improvements from getting away from the rainy season. We've seen a nice behavior of the brine in the last few days. It depends a lot on the amount of rain that we have during the month of March. If it rains as in the previous years, we may not see purified until the end of the month of March, maybe beginning of April. If the weather starts to dry up earlier, we will see purified production coming early on stage.
Thank you. There are no further questions at this time. I'll now hand back for closing remarks.
Well, thank you very much for all our investors and research brokers in this participating in this conversation. As I said at the beginning, Orocobre enjoys strong support from its investor base, and I hope to continue in that direction. Our shareholders are the most important customer we have to please, and it is our objective to continue to work towards increasing shareholder value. It is very interesting for me, and will be over time, to meet you on a one-on-one basis and understand what are your interests and concerns, and be able to deliver better explanations and fulfill your interest. The whole company is available for any question or request you may have, and thank you all very much for this opportunity.